Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gregg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we'll be discussing business valuations when the future is unknown and the past is not reliable with my special guests, Josh Schiltz and Stephanie Swetland. Josh's practice focuses on complex financial matters and disputes. He frequently lectures on forensic accounting matters and has been involved in hundreds of investigations involving personal and business disputes. He also has provided expert testimony in commercial and family matters around valuation, economic damages, and fraud. He's been qualified as an expert and testified in state and federal courts. Stephanie Swetland is also a licensed enrolled agent and is a QuickBooks Pro advisor for both online and desktop. She is continuing her education in accounting and plans to obtain her CPA license within the next couple years. They are both forensic valuation experts and offer tax advice in the state of Florida. And I think economic research and industry research and market comparables and transactions have always been a part of business valuation. I think just in the past, we've had a consistent economy. And so, the last time we kind of had a break in that consistency was 2008. And so now we're kind of coming back into there. And I don't really see valuation work changing much. I think that we have to go deeper. And if you're in litigation, you have to be able to support your position. And so, because we're not just seeing, Josh, Stephanie, tell me, but I'm seeing a ton of companies that have been exponentially more profitable during COVID or during the pandemic. And we also have to deal with that situation. It's, like we hear the restaurants and the hospitality industry has really had great decline. But what about all the other businesses that have skyrocketed, and you're in a divorce? How do you deal with that?
Listen, there is a spotlight on COVID-19 and the negative impact it has psychologically, financially, and that's all we hear about in the news, right? And we live in this society of give me information now, and that's the way it is. The fact of the matter is, to your point, a lot of businesses have done well. They've done better in some instances, even businesses that you wouldn't think. In the restaurant industry, I've looked at financials in 20 compared to 19, and I go, man, nothing fell off. So we had that huge scare that happened in March of 2020, and that really faltered a lot of different things. But if you look at what's actually transcending out of that, and here's a great economic indicator, bankruptcy filings are down in the state of Florida, right? I was just reading an article. Bankruptcy filings are down, I believe, across the nation. How much of that is because of stimulus programs versus how much of that is just, the economy jogging along? Yes, there's been a spotlight. There's all this attention of, oh my, and I think what was impacting people's opinions about valuation was there was this fear of the economy shutting down and ending. Here we are in March of 21. That's not happening, right? Mm-hmm. And the fact of the matter is, Melissa, you know this, when we value a company, we assess its ability to continue as a going concern. So we're always looking at these things. So, I think that overall, the economy has done much better than many people, economists, have ever thought. I think stimulus programs have improved company balance sheets. I'm hopeful, and I know we're doing it more and more, as we're doing not just valuation analyses, but maybe net worth schedules or whatever they mean. What we're starting to have a better understanding is the importance of a balance sheet, how to read a balance sheet, mainly, how to assess the change in a balance sheet going backwards and forwards from a point in time. And then looking at a balance sheet and understanding how it's producing cash. There's been a lot of times where we get hired to do the valuation, and at the 24th hour, we need an income analysis. So we've started doing a statement of cash flows as support for our income analyses, because what I started to see with some companies, Miami, for example, is an area that we do work in. Miami was hit by COVID harder than North Florida, where Stephanie and I are, in Central Florida even, where Stephanie and I are located. So I had a case just recently. We used net asset value on the business. It was all a service business. We won't get into that, right? But it came down to income. Through the statement of cash flows, no, their spending hadn't changed, Your Honor. I agree. But let's talk about why the spending hasn't changed. Well, the credit cards at the time of filing to the time of separation, there was about $50,000 on credit card. Remember all that account receivable in 2019? Started to get paid on that in 2020. But guess what? There's no more accounts receivable because there was no more work going on. And then the third layer of that was the PPP. So I think there, just at face value, when I'm talking with attorneys and clients, there's this whole understanding of, yeah, the economy's done well, there's been earnings. There are instances where you've had a pause in economic activity. I think for all businesses, it's safe to assume that March, April, May, and potentially June of 2020, and I'm speaking to Florida, but I think New York and California, and where your local market, you need to understand the restrictions in place to conduct. But understanding how the balance sheet has changed and what are the sources of cash flow, because a lot of times there's a confusion between earnings and cash flow, and you need to know what your local jurisdiction. But for example, in this case, yeah, they kept up with their living, but they've dwindled their net worth and their assets. They don't have that AR anymore. The PPP funds are gone, and now they've been living off of a credit card, which I think is something typical that we've seen. Listen, we live in an economy where the average American has $17,000 in credit card debt. I am curious to see how COVID has changed that, right? And maybe people are not using the credit card as much. Maybe there is a savings, but I truly believe that looking at and analyzing a balance sheet, whether for a business or for personal parties or whatever it may be, depending on the facts specific, is a necessary step now. I think it was done as part of our work, but there's more emphasis on it now.